Okay, so good evening, everyone. Welcome to our strategy session for our technical analysis training. This is actually, like I said, our goal here is just to give you guys the necessary confidence you need to actually start your journey as a trader, for those who want to be day traders especially. So the person we have today with us, his name is Mr. Kenneth. He's already here with us now. I'll be handing over the mic to him very soon because he's going to handle the class. I'm just your moderator for the purpose of this class. So he's going to be sharing with us over a period of 4 weeks. Today, making it the first day, is going to be with us. He's going to be with us next week and for 4 weeks at least. So it's very imperative that we actually try as much as possible to get the necessary information that we can get from him. I would also create avenues for you to be able to ask questions. You understand? So I'll be handing over to Mr. Kenneth right now, so he can actually take us. So Mr. Kenneth, the ball is in your court. The ball is in your court now. So I'm going to pin you. So let me move this screen. So you can actually share your screen for everyone. So Mr. Kenneth, good evening, sir.
Yeah, all right. Good evening, everybody. Can you guys hear me?
I can hear you clearly. So please, if you can hear Mr. Kenneth, just indicate by sending all of your emojis or use this chat box so that we can know that he's very audible to everyone apart from me because I can hear him very clearly. Okay, Shakira can hear, Z can hear. If you can hear him, okay. Augusta says you can hear. I need 2 more confirmations. Then we know that we are good. 2 more confirmations. Okay. Patrick says he can hear. And Michael God says he can hear. I think that will be enough. So, Mr. Kenneth, you are audible. So, I'll be muting my mic now so you can take over. Mr. Kenneth. Mr. Kenneth.
All right. I'm sorry. I'm back. Okay,
All
I'm
right.
back. So firstly, thank you, King, for having me here. It really shows how much you're really committed to what you do, and to see that people grow in knowledge as it relates to trading is important. And I think your people should be glad to have you, being their mentor and all that you do. So to the trading community, from the trading community, we are saying thank you for what you're doing. Well done, well done.
Thank
All
you.
right. Okay. So we'll be moving very fast. That was supposed to be here last week, but a day before the meeting, my wife gave birth to a very beautiful girl. And as such, I was kind of carried away with all of that, and you understand the euphoria of everything, and all of that. And so today, I will not say I'm fully set for the day, but I'll do the best I can do today. Maybe from the next class, I must have settled down and put all of those things together that is needed. So for today, we'll just see what we can achieve. We'll just see what we can achieve. Okay. All right. So firstly, I believe we understand what trading is all about. We understand what the by now we understand what the crypto space is about. I basically trade currency pairs. I trade gold, but we understand that they all kind of work in similar ways and the same way and all of that. So whatever you do here, you can apply it there, and it works the same way. And I happen to also kind of analyze the crypto charts a lot too, and get to understand how it works and everything. So it's just similar thing. The same thing that applies to the currency, which is the forex space, applies here also. Also, so so we'll be going very fast today. Uh, I I wish I could get a little feedback from us as per the level we are right now. The level we are right now. I just hope I could get maybe a few persons just say some things so that I really nowhere to delve in.
Okay.
Really nowhere to delve in.
So for most persons here,
Yeah.
we have various categories of people here actually. So we have people that are new. We have some people that have been in the training for a while now. So, but like what I told those persons that are new, that are actually starting out, I told them that the meeting will be recorded for future consumption. We get so basically this is for those persons that have gotten through the second phase of the training, where we cover technical analysis um and futures trading. So because we cannot actually start going into the time we have, we cannot actually go into the nitty-gritty. This is just to be a strategic session. Understand? So that's the idea behind this meeting. Get.
Okay, I get. So basically, trading, be it crypto, be it forex, is all about support zones and resistance zones. Support zones and resistance zones. Now, that is the simplicity of trading. That is the simplicity of trading. Looking out for support zones and resistance zones. Now, support zones for the beginners, it to them it will just be the previous high, previous low, higher highs, creating higher highs and higher lows, and all of that. But the in when you go deeper into trading, you realize that um, support zones can be anywhere other than just creating higher highs and then you're looking at the previous high as the next support. Support is like the market is buying and then it's trying to pull back, do a little pullback on the chart, and then you're looking at it as the moment it gets to the area where the previous high was, if it's buying where the previous high was, you're looking at jumping into the market because you want to ride with it upward. That is a support zone. I'm not ruling that out. It is a support zone, but there are different ways to analyze the chart to get your support at different levels, so that what informs your support today may not be what is informing your support tomorrow. So, in the course of this training, the four days training, we're going to be looking at different areas of support and resistance. Now, for those who are day traders who are trading with the say 15 minutes time frame, the 30 minutes time frame, the 5 minutes time frame, those who are scalpers, quick into the market and quick out of the market, those persons will be looking at it from that angle. Those who are day traders will be looking at it from the 1 hour candles, just like that, 4 hours candles. Those who are swing traders, we are looking at it from the daily time frame, the weekly time frame, just like that. But we'll see how fast we can go in all of this. Now, firstly, I want to sound this: support is not a line, because I've realized a lot of traders just draw a line on their chart and they believe the moment the market gets to this line, the moment it touches this line, I'm going to be taking this trade. It's not a line, it's actually a zone. You must understand that concept in trading, that support or resistance levels are zones. Support could come in terms of Fibonacci retracement. You can see it in terms of trend lines. You can see it in terms of higher highs and higher lows. You can see it in terms of even normal market indicators, just like the moving averages. You can see it from different angles. Now, so those angles is not a line, it's not a line. In the course of this class, you're going to be seeing how that is not a line. It's actually a zone. It will guide where you're putting your stop loss. It will inform where you're putting your take profit. Most especially your stop loss. When you understand it's a zone, you know how to avoid the zone of support or of resistance. You know how to avoid it such that when the market comes to that region and it doesn't just stop you out and then start going in your direction, your prediction can be very perfect. But if you miss your stop loss level and your take profit level, you may not be profitable for the day. And the reason we are here is to make profit. We are not here to give the market money. We are here to make money from the market. So that's the goal. So all right, let me quickly share my screen. Let's go into the chart. Let's see what we can bring out. what we can quickly bring out from the chart. For today, I'm sorry, but for today we are going to be using the MetaTrader 5 to analyze. I don't know if you guys know how that operates, but we're going to be using it to analyze the market for today. Okay, just hold on. All right. I'm trying to share my screen now. Okay. So can you guys see my screen?
Yes, I can see your screen.
All right. So let's use MetaTrader 5 for today. In our subsequent classes, I'll get back to what you guys know best, which should be the maybe trading view, or we can use Bybit, can use Binance in our subsequent classes. For today, I just have to do this. I don't want to miss the class for today. That's why I came. That's why I'm here. All right. So firstly, let us study um, order block. Order block. Let's study order block as a region of either support or resistance. Okay. Let's study order block. Now, when you open your chart and you're watching the market, there is a point where patience will really help you. Patience will really, really help you. So you open your chart and you are noticing a kind of movement on the chart. Um, Take for example, when I opened this chart, I think that was yesterday or 2 days back. I think it's yesterday. Though I missed the trade, I didn't take this trade. I actually missed it. When I opened this chart, can you see this line I'm having on the screen?
Yes, the one that is moving.
Uh, yes, the one that is moving. Now, you see the vertical line where it is right now, and then you see the horizontal line where it is, right?
Yes.
Okay. So just fix your eyes on that point. Fix your eyes there. Just fix your eyes there. All right. Fix your eyes there. Let me just quickly show us something with this. Okay. So fix your eye on that spot. Let's. So now, if you notice, before that spot, which I indicated before, there was this impulsive move to the upside, right? There was this move to the upside. Take for example, BTC USD. You open your chart and you notice this buy move that is making a lot of sense. But then you notice that there was a change in movement to the downside. And the change in movement to the downside was very, very impulsive too. Like, take for example, you open this is 1 hour candle. This is 1 hour candles. That's what you're seeing here. Now you open it and you notice the 1 hour candle is giving you a very sharp move to the downside, which is that zone which I showed you guys. And then you notice that move to the downside, very impulsive, very sharp, that bearish move downside. Now you notice that move to the downside. You're not going to rush into the market. That's a mistake a lot of people make, because the moment they notice, the market is selling now, it was buying before, now it's selling. So they want to jump into wherever they meet it. They just want to join and then flow with it. That is where you now see people who are struggling on where to put my stop loss, where to put my take profit, because right now you cannot tell the market structure. You cannot tell for sure that this is the structure of the market, so that you cannot tell where the market is going to reverse from. Market will not just keep moving in one direction. There will be pullbacks. Now, those pullbacks are very important. Now, the moment I came into the chart, that was, I believe it's yesterday. The moment I came into the chart and I noticed this movement, What I did was, what was the last candle? The last candle that was bullish, because now I'm seeing a bearish momentum. So I'm looking at what was the last candle that was bullish before the bearish momentum started, before the bearish bias started. What was the last candle that was bullish before the change of character? The moment I noticed what the last candle that was bullish, I took this stuff, this triangular shape, and covered it from the top of the candle, which is the wick, to the base of the candle, the top wick and the bottom wick. I took it from that point to the other point. That also is to emphasize the fact that you don't trade in lines, you trade in zones. That will inform your stop losses, zones. So the moment I noticed it, let me open it up so that it's clearer. And I noticed this bearish move.
Okay, sorry, excuse me, Mr. Kenneth. Is it possible to make your cursor or your visible? Because some people say they cannot see what you're analyzing. For me, I'm seeing it clearly, but I don't know if it's because I'm using a laptop to look at the chart. One says that the candle is very thin. So it may be due to the fact that they're using phone. So what you just try to do for me is, while you zoom it out, whatever area you are referring to, please, you just try to regularly indicate maybe like a cursor or with anything that can actually show your movement or the part you're talking about. Please. Thank you.
Okay. Let me introduce that stuff again. I wish I could hear everybody or some persons to really um, give me clarity as per those
Very
who are
good. Okay,
understanding
let's
what
see
I'm
if I can
saying.
unmute some persons. So
Okay.
they would
So
give.
that you just make me know you understand what I'm saying. It keeps me going.
Okay, so let's see. Person that brought it to our attention, Michael Tangood. Michael Tangood, please unmute your mic and
Are we
Michael,
ready now?
okay. Michael has refused to unmute mic. Oh, it's all right. Michael, yeah, Michael has unmuted his mic. So Michael, can you hear us? You're not seeing anything.
Yes, yes, I can hear you, sir.
Okay, you said you were not seeing what is that. Can you see the screen clearly?
No, I can't do. I'm not seeing what is
Are you using
analyzing.
a phone? Is it that you cannot see screen at all, or what is happening?
Yes, I cannot see the screen of what is analyzing.
You cannot see
I'm
screen
using
at
a
all.
phone. I'm using an Android phone, so I'm not seeing what is analyzing.
What I'm saying, you are not seeing the screen at all, or it's too small.
I'm not seeing it at all.
Ah, I don't know why you're not seeing it at
I'm
all.
seeing here, something here and names. Just the name
Eh?
of the names of the people participate. That's what I'm seeing.
No, I pinned this thing. So you just check for Kenneth and click on his own. I pinned this, so you're supposed to be seeing it. So I don't know what you're seeing, but you just have to find Kenneth. He's the one sharing screen. I think his name is Kenneth. So click on his this and you should be able to see his screen. So I don't know why you are not seeing the screen, but you should see the screen. It's not the names of people. Somebody said it's probably your network because other persons are seeing it. Okay, so Aziz is seeing the Aziz, can you see his screen? Yeah, Aziz says you can see the screen clearly. So probably you just find Kenneth, click on him because I actually had to pin his screen so that everybody would see it here. So you just find a way to work around it. Okay, Chibuzo
Oh,
Elizabeth says you can see the screen. So you're the only person not seeing the screen. Okay, Patrick says you can see the screen, but it's tiny. So orient your phone in a put your phone in landscape
Landscape.
orientation. Yes, put your phone on
It will
landscape.
help.
It will help. Okay, so I think you can continue, Mr. Kenneth.
Okay. So if you can see my screen, I'm sorry. Okay, maybe in the next class, what I'll do, I'll use laptop.
Yes.
Okay. I am not. I'm just here. I'm just here because I need to be here for today. So maybe the next time I'll just use laptop, okay? Please just bear with me for today and catch what you can catch. All right. So let me use this again to pinpoint where I'm talking about. Can you see the lines now?
Yes, I can see the way it's moving.
All right. Do you see the green candle before the red? This green here before this
Yeah,
red.
sure. Yeah.
Okay. So, and this is what I'm saying. You notice before now the market was kind of bullish from this point. It was bullish up to this point, right?
Yeah.
Okay. And then it became a little bit bearish here to this point. But then there was this final movement that proved a bearish move. Now, before this move, try your best to pay attention for today. Just learn what you can learn. By our next class, I believe I should do my laptop and be maybe more clearer. Um, I don't think I'm talking to beginners. I don't want to believe I'm talking to beginners, so that's why I'm going this far already. All right. So before now, you notice this bearish move around this point to this point. Now we are looking for the point where market will break this move, and that indicates that there is a change. There is a change of character in the market, meaning though it was bullish before, it is now bearish because the sellers are now stronger than the buyers. That is why they were able to get this move from this point down to this point. Okay. Now that indicates something that the market is currently having a selling bias. And because of that, I am not going to jump into the market as at this point. That's the mistake some of us will make. We came into the market and let's just sell. The market is selling. Let's quickly sell. I assure you, most of the time you'll be making mistakes because your stop losses will not be accurate. What you're doing will not be accurate. So I am waiting now for this market. So as at yesterday when I came in, the chart was around this region. I believe the chart was around this region. So what I did was to take out, I'm looking at this green before the red. So I took out this shape and place it at candle and to the base of the green candle and dragged it out. So I'm going to be patient. It doesn't matter how long it takes. I'm going to be patient until the market comes back into that zone. Why? Because the reason is because, hold on. The reason is because I noticed that sellers as at that zone was strong enough to push the market downward. So meaning there are sellers waiting for the market there. There is volume for sellers around that zone. So I'm going to be waiting for the market to get back to that zone. Like not just me, a lot of traders are going to be waiting for the market to get back to that zone. Now that zone, that candle before they move to the downside is what we call the order block. Now that move is important that I am patient for it to get there. So the moment it gets there, I'm waiting for another confirmation. That is where you need to understand what candlesticks are. You need to understand the different types of candlesticks, the reversal candlestick pattern, the continuation candlestick pattern. You need to understand those things. And the ones that are indecisive, you need to understand those candles. Those are for beginners. You need to, if you don't know it already, go on YouTube, just type it, or you can get back to King. King may guide you through that. Now, you just need to know the types of candlestick. And when you see a candlestick that is bearish, it gives you another confirmation of the move you've been waiting for. So now, when the market came back here, if I was active today, if I was active on this particular currency pair, I'm going to be entering this market as at this point. I believe you know the point I'm talking of now. Let me quickly just bring it out again so that it's clear. You know, this is the point I'm talking of right now. This point here, when the market came back into this zone. I'm waiting for a move. So the moment the market gave me this move, this first move to the downside, then that second move to the downside, for some persons who are impulsive in trading, they will jump in the moment the market gets in there. It's okay. It's still okay. But I'm not that impulsive. I'm careful. I wait for confirmations. I wait for other things to give me further confirmations before I jump into the market. Okay. So now, some persons, the moment it gets there, they will take the trade. The moment they take the trade, they may take the trade at the base of the initial green candle, which is the order block. They will take the trade at that base, and then their stop loss should be above the order block, maybe around here. All right, above the previous high, above the order block. The stop loss will be above there. You want to stay away from the zone as much as you can. You're going to be risking as much as you can and staying away from the zone as much as you can. So you move away from the zone to somewhere around this point, and then you're taking the trade and you're targeting the next low, which will be around this point. Okay, they are looking at this point. You're okay with the trade. The moment it gets here, you're okay with the trade, depending on the lot size you're using. And you know, in trading, you're not going to be focusing majorly on, you're not going to be focusing majorly on how much you want to make. If that becomes your focus, most likely you're going to be risking more than you're supposed to risk based on your capital. You're going to be focusing on how many pips you can gather. Okay, how many pips you can take out of the market. So if you take 20 pips today, or 50 pips, or 100 pips today, now the next day you're taking similar pips, you're looking at taking similar pips. Now that guides you. If you have a small capital, that guides your decision. If you're having a big capital, that guides your information. And what you're making from a small capital will not be what you're making from a larger capital and increasing your lot size. You get my point? So this is order block. This is order block. This is basically what order block is about. You can see it play out here. You can also see it play out here. Okay.
Okay, so Mr. Kenneth, just for clarity's sake, I don't know if you can put a simplified definition of order block. I know that there may be some persons who want to ask the question. Can you just simply define what order block is? I've understood the concept of order block, but how do you simply put it? Just simply put.
Okay. Okay, let me simply put, order block is the candle, in my simple terms now, the candle before the move to the other side or to the opposite side. The candle before the impulsive move, yes, add that to it. The candle before, or the candles, order block sometimes may not be one, may be more candles. Now, those candles before the move to the opposite direction. Do we get that? The candle or candles before the impulsive move, not just a move. I'm not just talking of a small creepy move. I mean an impulsive move to the other side that breaks the previous structure or breaks the previous move in character. You are seeing that the candles move from where it was going before, change direction. Change direction. Now, the moment it changed direction, that candle, the previous candle of the other move, which is either it is a selling candle or a buying candle. As we go through, we'll also see it from the other side. Now we are looking at it from the bearish side. Now where the candle was buying, and now we're selling. Now you want to cash that sell. You also see it from the buying angle where it was buying, and it moves to the buy side, to the sell side rather. You want to cash that buy. The moment it comes back to that point where the buyers came into the market. Okay, so order block simply just shows you where the buyers or sellers, the opposite direction, took charge of the market. Is that understood?
Yes.
If it's not understood, please ask questions. Let's just clarify it.
Someone has asked,
if you still don't get it, ask your question.
Candle, is it bullish or bearish?
You said?
Someone asked, the candle, is it the bullish or bearish? That's someone's question.
The candle, if it's bullish or bearish, if I did correctly.
That's what the question was. The candle, is it the bullish or bearish? Just explain. Get the question.
Based on this example we are using now on this chart, the candle we are looking at right now is actually bullish. before the bearish move. The bullish candles here are the green candles, while the bearish are the red candles. Now, the candle we are looking at here is actually bullish, which is, let me cite it out again. Like I said, it can be from either side. So it can be bearish, it can be bullish. But based on this example, it is actually bullish. Okay? Let me spell it out again. Let me just take out a line. I think that will help. All right. So I'm looking at this particular bullish candle. Okay.
Okay.
Can you see it?
Yeah.
Yeah. So that candle there is bullish, but it could also be bearish. Take for example, I want to use this other block, this one that is bearish here. Do you get my point now?
Okay.
Yeah, that is bearish. If I want to use this, for example, this is actually bullish, right?
Yes.
Okay. So if, for example, I'm trading this, for example, I'm going to be taking this tool, take it to the top of this bullish candle, and take it to the base of the bullish candle. All right. All right. So do you understand what I'm saying now?
Okay. Yeah. So basically, if you have to re-explain the other block, you said it's a candle before the impulsive move to the opposite direction. That constitutes the
Yes.
other block.
Yes.
Yes, that's when the impulsive move to the opposite direction now for that breaks the previous structure. So that candle that was before the impulsive move is called the other block.
Yes.
So
Yes.
do you understand the other block definition again?
So do we understand it, everybody, please? Because there's a way I even in my class, there's a way I love to teach. I really love people to respond to me. I really love people to understand it. If you don't understand it, I feel like I wasted my time. So it's important that I know you get what I'm saying. I'm not in haste to jump through it and just throw it off your head. Even if it's passive, it's not actively entering you. I really want it to get to you so that you understand it.
Okay.
So if I can get maybe two responses that
So Fred
indicate that,
has
okay, I
indicated
understand.
that he has gotten it. Chinedu, you were the one that asked a question, so please respond. Say, somebody is saying, please explain the other block again. So
It. Okay. So let me try to explain again the other block concept. Okay. So so firstly, the market on this chart right now, we are using this as an example. Okay. In our subsequent classes, we'll use Bybit, we'll use other the platforms you guys are familiar with. All right. Now for this chart, we are seeing the market buying. We are seeing the bullish momentum. And then we are seeing it create lower lows and trying to create higher highs, if we understand what that concept is about. Creating lower lows and higher highs. Okay, so we are seeing that happen. And then we notice the market changed in structure. From the buying momentum, we notice a change in direction to the selling momentum. And the selling momentum is not just a little shift. It's a major shift. We can see the candle it created here. We can see this particular candle, if you can, this particular candle from
yes,
this point created it to this point. That is massive. That is a massive move. And it takes a selling momentum to be able to achieve that. It means that the volume of sellers in the market increased. The volume of sellers in the market increased for you to be able to achieve that. So there was a lot of selling. And BTC, USD, all of a sudden you notice this sharp move to the downside or to the upside. Like I said, other block could be from either direction. Now you notice that sharp move, which shows you that a lot of people, take for example, if it's a buying candle now, it shows you that a lot of people just purchased BTC. It shows volume in the market. Now, the moment you notice that volume and the market was actually moving in a certain direction before, and then that volume came into the market, it shows you that there is a change of bias. It is now a bias that is different from the previous bias in the market. So now this particular move to this downside, it actually started with this smaller candle. Okay, this smaller red candle, bearish candle. It started with this smaller candle before it created this massive move to this downside. Now, there is this green candle that was formed before this change of move. Now, the moment I notice this happen, this move to the downside, and then the third candle, which is the first red candle, second massive red candle, and then the third candle, I'm going to be waiting for something for this trade to come back to this zone. I'm not going to be jumping into the market here like some of us will do. I will not jump in here. I will not be excited. Hey, they're selling, so let me jump in. Let me just sell with them. No, I'm going to be waiting for the market to come back to retest this zone, because market is all about retesting, pulling back, support, resistance. It's going to try to come back there because that point for it is a resistant level. Okay, so it comes back to this resistant level, which is this green candle before the move to the downside. Now I'm plotting it out. I'm going to be plotting it out from the top of the green candle, which is the initial candle before the other move, and to the base of the green candle, touching the wicks. We know what wick are now, right? What the wick is in a candle.
Yes.
You can go and learn that. For those who doesn't know, go and learn about candlestick, learn about what wick is, what the body of a candle is, and all of that. The opening of the candle, the close of the candle. Please, I would advise you learn that before our next class because it's important. Open and the candle open, the candle close, the wick of the candle, the body of the candle. Now, I'm taking it from the top wick to the bottom wick. Now I'm dragging that out, which is what I did yesterday. I think it should be yesterday. Which is what I did yesterday. I've not really I didn't trade today. So that's why I didn't catch this move. So I already dragged this out yesterday before the candle even danced into it. So what I will be doing is waiting patiently for it to dance into it. And this is 1 hour candle. You can imagine the patience it will take to wait. This is 1 hour candle. So for every candle you're seeing here is 1 hour, 1 hour, 1 hour. You can count the number of hours before it finally got into that point. Now it eventually got into this point. I'm now waiting to see what I will do based on the candles that forms. Go and learn about reversal pattern of candlestick, learn about continuation patterns, learn about indecision as it relates to candlestick. It will help you. Go and learn about those things. Now, the moment the market comes in here, some persons will buy immediately, sell rather immediately. They want to sell immediately. So they take the sell. Your stop loss, which is very important, your stop loss should be, hold on, your stop loss should be above the previous high and above, it must be above the other block. Some will take it to be above just this point. In another, it's above the other block. But you know what liquidity is, and you want to avoid liquidity in the market. It could be above the other block, or you take it above the previous high. Okay, that's where your stop loss should be, above the previous high, which is those two touches. Even the third one has that long wick. So above it, and your take profit should be around this point. Your take profit should be around this point. Okay. the candle that started that move to the upside, you want to also make sure you take your profit before it gets there, because anything can happen around that zone. The market can start reversing, just like you are seeing it happen now. You don't want to see your profit start coming in, and then before you step out and come back to the chart, you're seeing your profit going. Okay, so it should be around this point. So you're just waiting for the market to do all of this. So now from this point, you see your stop loss above, you see your take profit below. So this should be around 1 ratio. This should be around 1:3. I believe 1:3. I don't want to do the calculation now, but it should be about 1:3. So it means that if you're losing, for example, $1,000, you're trying to make $3,000. If you're risking $1,000, you're trying to make $3,000 on this particular trade. Okay, so that's basically what order block is about. Basically, what order block is about. We'll look at it from other areas and other points in the market. We'll look at it from BTC. We'll look at it from maybe other cryptocurrencies, which is what you guys really focus on. So is it clear enough now?
I believe it's clear enough, but I will open it because I am not the only person in this training. So
Your voice is kind of very low. I don't know if it's my phone.
hello, can you hear me clearly now? I said I believe it's. Can you hear me clearly, Mr. Ken?
Yeah, I can. I can. Go on.
Okay. So yes, Patrick says it's clear enough. So I want to also get feedback from other persons in the training. Patrick says it's clear enough. Emmanuel and Marco says it's clear. We still have other persons, so they've not indicated if it's clear. So you can use the chat box to just say if it's clear. Okay, Joxy says it's clear. Okay, very clear. Aziz Fred says it's clear. Aziz Saibu says it's clear. I think there are some persons that have also indicated using the emoji to actually show that it's very clear. Okay, so personally, I think it's also very clear. You've actually explained it in a way that is simple because you've been able to give us entry, how to actually pick a good entry position in the market using this particular strategy, and also how to set our SL and how to set our TP, because I think that's where most people get it. Yeah, it's difficult for most persons. They don't know where to enter the market. They don't know where to set their SL. They don't know where to set their TP level. So this particular simple strategy, from what you've explained, it's easy for them now to know, okay, using this strategy to get their entry, their SL, and their TP, their take profit. So I think it's very clear. So they've all stated. So you can continue, sir. Except you want to
Right.
do for questions.
All right. So you can still see my screen, right?
No, your screen has disappeared.
Okay. Okay, I'm coming. I'm coming. Okay, you can see my screen now, right?
Yes, you can see your screen.
All right. Okay. So now based on what we just talked about, what is the possible next point of order block on this chart? Who can just okay. Because we're not using the same chart right now, you may not be able to easily pinpoint. But now if I'm going to
Okay, if you want to throw a question open to the house, anyone who indicates interest in answering the question, I can just unmute the person so the person can actually answer the question. I think that would make for interaction and it would be good. Hello?
I can't hear anything. Can you hear me?
Yeah, can you hear me? I say if you want to throw the question to the house, I can actually, anyone who indicates interest in responding to the question, I can unmute the person so the person can answer the question. But you're asking a very interesting question just now.
Okay. Okay. So I was asking, but then let's just get this first.
Okay.
Okay, let me ask this question first. Do we know what an engulfing candle is? Engulfing candle.
Yeah, Shibu's Elizabeth says yes. She knows what an engulfing candle is.
Okay, who else?
Who else knows what an engulfing candle is? Please use the
If you
chat.
don't know it, just indicate, because I
Emmanuel
really,
says,
from this question I will know
Emmanuel
where
says
we are
yes.
coming from.
Emmanuel says yes. Emmanuel Marco says yes. He knows what an engulfing candle is. Who else? Please let's respond fast. Patrick says no.
Okay, so if you don't know it, just indicate that I don't know it.
Okay, we've gotten 3 persons, 2 persons that have said no. We've gotten 4 persons that have said yes.
All right. All right. So I believe for those who knows what an engulfing candle is, I believe you can see that it has played out here for the from the down point. You can see that bullish engulfing, that bullish engulfing there. An engulfing candle is basically what you're seeing here. If you can see the point where I am now, if you can see this line, you can see where it is intersecting. That green candle, that bullish candle, after this bearish candle. Now, engulfing means it is actually bigger than the bearish candle. It is actually bigger than the bearish candle. It covers, engulf means to cover. It means that the bearish candle is covered in the bullish candle. You can see the bearish candle there, which is this red, and then this bullish candle, which is the green. Now that green is actually covering this bearish, which is engulfing the bearish. So this is an engulfing, a bullish engulfing candle. Now this bullish engulfing candle already tells me that there is a buying bias right now. It means that currently on USD JPY, the buyers are back in the market. Sellers was dominating the market, but buyers are back in the market. That is what it tells me. Now I am seeing another green candle happen here, then the third green candle happen here. Now I am still waiting because I may not have to do that on this chart now, but if we go to, let me just do that quickly. Let me give a perspective. If we go to the 4 hour candle, for example, okay, from the 4 hour candle, we can see that the market is actually is ranging. Okay, it is ranging. Ranging means it is around a particular zone. It's not really creating higher highs and higher lows. It's just around a particular zone, which I don't want to bother myself about explaining right now. It will take us back. So it is around a zone. So I'm expecting the market to either buy to the top side and start selling again back down. So I'm expecting the market to come up to this point, around this point. If you can see this red, I'm expecting the market to come up to this point, and I'm going to be watching that for the behavior of the market around that region to make my decision, because the market is ranging. If the market was trending maybe to the upside or to the downside, I will know what to do best. But since the market is ranging based on the 4 hour candles, what the 4 hour has been doing, I will not be looking at a continuous sell until it has broken. Let's take it to the 4 hour. Until it has broken this zone, this point, until I see the market has broken this point. Can you see the point, please?
Yes. Yes, you can.
Okay, until I see the market has broken this downside, it has broken it with a very good move. I would have seen that it has broken it before I can think that the market is currently selling. It has changed direction to full sell. For now, I still believe the market is ranging until I see that happen. So if it's ranging, then I'm expecting this buy to just buy to a point and start selling back down around that range. Okay, so for those who would want to take a trade, you are going to be avoiding expecting it to. Because this is why I'm saying what I'm saying. This is why I'm saying what I'm saying. Sometimes in your mind, you will believe that the market should do what you expect it to do because you believe that the market works with your mind. So you want to force the market to do what you want it to do, but the market doesn't behave like that. The market is the market and is doing what it wants to do. You have to just blend with what the market is doing. I believe you know that your one BTC is not what is moving the market. I believe you know that your one BTC is not what is moving the market. What is moving the market has to be something greater than just one BTC. That would be a massive volume, massive amount of BTC to move the market to the buy side or to the sell side. Okay, so based on you are a retail trader, you are those who are just following what the market is doing. So you're going to be waiting for confirmations in the market for you to follow what the market is doing. So you are not jumping in and expecting the market to do what's in your mind. So right now the market is ranging. That is what it's doing on this particular chart, USD JPY. It is ranging. So you are going to be ranging with it until it change direction and break this downside. When it does that, you cannot say, okay, it is now to this direction. It is not trending, and you can follow the trend. Okay. Then if it breaks it to this side, this top side, you can now follow it to the top side. The same way it applies on BTC, the same way it applies on USDT and all of those your cryptocurrencies that you trade. The same way it applies there. Okay. So I just believe you've gotten all I have to say for the day. The time is already fast spent. It's 1 hour already. So I believe you've gotten what I have for today. So in our next class, I hopefully going to be using the laptop, and then maybe it will be clearer and more the candles will be bigger, you'll be seeing it clearly and all of that, and then we can explain better using your own cryptocurrencies. Okay.
All right. Thank you very much, Mr. Ken. Would you have time for a small question and answer session, or they should drop the question later on and I will probably forward it to you. I discover your battery is kind of low. I don't know if you. Hello, Mr. Ken.
All right. Sorry.
Okay. First of all, I want to appreciate Mr.
All right.
Ken.
Can you hear me?
Yeah, I can hear you. I said, would you have time
Okay.
for?
So if anybody have any question, we can do that. Let's say let's use 10 minutes
10
to
minutes.
quickly do that if we have questions.
Okay. Is there anybody with question? You just keep it brief, keep your question brief, straight to the point, so you can answer your question, please. So organize your thoughts and ask your question. We're going to take the next 10 minutes for question and answer. Anybody with question?
And it doesn't have to be based on what we just talked about. Any question you really want to ask right now, that if I see good enough to quickly just throw an answer, maybe about trading, about money management, something quickly.
Okay, so one person asked, where did the 1 hour time frame start from? Is it the last candlestick from the left? Yes.
Okay. For that, when you go to your 1 hour, take for example, you're using Bybit or you're using Binance, and I believe you know how to put it on 1 hour time frame. The moment you do that, every candle is 1 hour. Every candle is 1 hour. So any candle that is still moving has not completed its 1 hour time frame. So the moment it stops moving and starts another candle, that is 1 hour that has been completed. So the next one that starts is actually starting another hour. Then when it finishes it has completed 1 hour. Then the next one that forms is another hour. So that's it. So every candle will be 1 hour. So if you're using 15 minutes, every candle will be forming 15 minutes. What happens in the market in 15 minutes will be forming by each candle.
Okay, thank you. Zik, please, are we using the body of the candle or the wick to draw our zone? This is from Zik.
Okay, for that, use the wick. It is safer to use the wick. The reason why you're using the wick is because The market has gotten there before. Let's take it down to normal market scenario. Normal market scenario. If you are into selling it, let's say for example you're selling furniture. Furniture, for example, the price of a particular furniture has gotten to, let's say, $2. Let me use dollars now, which will be general because I believe there are some persons here that are not Nigerian. So let's say $2. The market has gotten to $2 before it dropped back down in that 1 hour or 15 minutes window. Before it dropped back down, so that $2 it got to before is what you should be looking out for. So you are going to be taking from that point as the zone, even if it eventually dropped down to form a body below that week. So because it has gotten there before, there is tendency for it to still get there. So you're going to be working with week and not just body. Week from the top to the bottom week.
Okay, thank you. Mr. Emmanuel Amako says, can someone use this strategy alone to trade? And which time frame do we need to trade this?
No, you can't use this strategy alone to trade. Now, the thing with trading is that there is need for confirmations when you're trading. Need for confirmations when you're trading. So when you spot order block and you say you want to focus on order block only to trade, which is possible to say I only trade order blocks. Now, when you do that, there is also need for order confirmations to add to order block, so that you're not just jump. Because I believe you know by now that there is no holy grail when it comes to trading. No holy grail. Yeah. So sometimes it may not play out the way you want it to play out. Sometimes it will. The one we just did now, the example we use now, played out perfectly. But that another day it may not play out this exact way. So that is why you will need other confirmations when it gets into that zone to now, okay, yes, it's going to play out. Then you take it. Because if you jump on it all the time like that, it may not go the way you expect it to go. Okay.
Okay, so then the person also asked, which time frame do we need to trade this? That was the second question by the same person.
Okay. For order block, it works for different time frames. But I will recommend 1 hour. 1 hour. You want to see what happened in 1 hour. Then if you are a scalper, who wants to take a trade that maybe lasts for a few hours, you can choose to take it from a say 15 minutes candle. 15 minutes candle. It will still work. It can still work. But then for order block, I will always advise you use 1 hour. 1 hour, because it gives you a larger range of what happens in the market. What happened for 1 hour cannot be compared to what happened just in 15 minutes. 1 hour will tell you much more. It tells you that the buying bias happened for a larger time frame. You understand? So I would advise a 1 hour, but then 15 minutes can also work. 30 minutes can also work.
Okay, so next question. Is it possible that 1 hour is uptrend and maybe 4 hours is downtrend? Which one are we supposed to consider more relevant?
Okay, when it comes to trading, it's always important to consider the higher time frames to be more relevant, because it tells you the eventual move of the market. The structure of the higher time frames tells you the eventual move of the market. But then between those moves, that is where you are using the 15 minutes, the 5 minutes within those moves. So for me, what I do is this. I always use my top-down analysis, okay? So when I come into the market every day, every single day, I will first look at the daily time frame and then drop it down to the 4-hour time frame, then drop it down to the 1 hour time frame, and then to the 30 minutes to the 15 minutes. Why am I doing all of this? I'm looking at the overall move of the market first to determine what I'm looking out for. So when I notice that the overall move of the market is buying, is bullish, I am only looking out for opportunities to buy for that day. That's how I trade. I'm only looking out for opportunities to buy. So it means that if the 4-hour is bullish, I'm not going to be using a bearish order block. I'm going to be looking for a bullish order block to take a trade. I don't know if that is clear.
Okay. So when using the 1 hour or 15 minutes time frame, do we have to close the trade within that time frame?
Okay, if you're using the 15 minutes, for example, to take a trade, I believe you are not trying to close the trade in 15 minutes. That's not what it means. It doesn't mean you close the trade in 15 minutes. You're only just using the 15 minutes to take the trade. Okay, so when you take the trade, you can watch that trade play out for the next 5 hours, for the next 4 hours. Okay, so that is where you're using the other time frames to make your decision too. So even if you take the trade with the 15 minutes, you're looking at the let your have this in your mind. Even as we go on in these classes, maybe I will also talk about that deeply. Have this in the back of your mind that your trades, you're looking at support and resistance levels. So even your take profit is at maybe a resistance level, a support level, possible point where the market will start reversing from. Okay, so you are not looking at I'm counting when I take a trade, I'm counting 1, 2, 3, 4, 5, 6 minutes to close the trade. No, you are just looking at a particular structure, which could be 1 hour. It could be in 1 hour candle. That's where you are finally putting your take profit, or 4 hours, depending on how long you want to stay on the trade. So if you want to use 15 minutes to take the trade, you can use that 15 minutes chart to plot your take profit. That doesn't mean you're waiting for 15 minutes as you're counting 1, 2, 3, 4, 5, 6 minutes to take your take profit. No, you're just looking at that chart and you're looking at the previous highs, the previous low, areas of resistance and areas of support. Okay.
All right. Thank you very much, Mr. Kenneth. I think that's the last question I think is for me to answer. So this person asks, when is the altcoin season? No one can actually determine the season in the market. There's something that Mr. Kenneth even said in the course of this training. We are following the market. Do you understand? So we cannot necessarily predict the time, irrespective of when you set your TP itself. If you set your TP after analyzing the trade, you cannot actually predict the time when that particular trade will be triggered. Do you understand? So if it's going to happen in 15 minutes, in 20 minutes, can be using the 15 minutes time frame. But so same thing with this season. So the altcoin season can actually take a longer period in time. It's just that it's a season, so it's going to be visible, it's going to be obvious. Or most altcoins are going to start skyrocketing in price. That's when you know the altcoin season has come. We just try to predict based on what has happened. So the anticipation as before the end of the year, we are going to have the altcoin season because it's been following a cycle. You understand? So, but no one can fully predict the altcoin season. That's why you don't just invest based on hype, so without necessarily taking proper risk management into consideration. Yeah. So then Shibuzo Elizabeth says, does it mean that support and resistance is where we can enter, trade, and sell? Mr. Kenneth. Mr. Kenneth, please unmute your mic so that, okay, I will have to find you. Okay. Mr. Kenneth, does it mean that support and resistance
All right. Can you hear me now?
Trade and sell? That's the last question.
Okay. Now, all right. Can you hear me now?
Yeah, we can hear you clearly.
Okay, so support and resistance levels, like I said before, that's how the market moves. Okay, so I want to catch it at maybe support level. I want to catch it at resistance levels. Why? Because that is where the market will start a move from, and I don't want to join the market when it has already started moving too far away. So I want to see that I join the market where it is already starting from. So in my answer, I would tell you, take your trades from support and resistance levels. Now, support and resistance level, like I told you, is different. It's different in the market. It could be that you're using Fibonacci retracement as your next point of support or resistance. It could be that you're using trend line. So you want to see that when the market touches your trend line, and that is when you're taking your trade. If, take for example, it's a selling trend line. You want to see that when it touches it, when it buys to your trend line, you want to sell from it. Okay, so it is always advisable to join the market when it's starting, join the move when it's starting, other than joining it later on. So support and resistance levels in the market is always the best times to take your trade.
Okay, thank you very much, Mr. Kenneth, for taking so much of your time today. It's been a pleasure to have you here, and I'm not just the one saying thank you alone. As this side, we're saying thank you for the session. It was really interesting and helpful. Fred is also saying thank you for the presentation, and I believe that we are speaking for a vast majority of people here, and even people who actually watch this video, to say thank you for the wonderful time that you had with us. We're looking forward to more sessions with you. I believe that we've all gotten a lot from this, so I would recommend that for the next time we are having this session, let's try as much as possible to be available on time. Mr. Kenneth is willing to share with us from his past experience. You know, he's a trader in the Forex market, and and he's willing to share his knowledge with us. So let's just do well to encourage him by being available on time. And being available on time, it's going to be very, very it's going to encourage him if we actually make ourselves available on time, not like we come and start waiting for people. So if you also have other persons that you know that will benefit from these sessions and this training, you can also recommend the mentorship program for them to join. Do you understand? You can also recommend the mentorship program for them to join, because we're going to be having more sessions like this. We're going to be having more sessions. Like I told you, my purpose for the crypto space is to actually get people that will be sufficiently independent in the crypto space to trade and to invest, find opportunities for themselves without having to run from one signal room to the other. So if you know people who actually benefit from this, get them interested in being a part of this mentorship program. So see you next Friday. Mr. Kenneth, thank you very much. God bless you richly. Say me well to your family, your wife, and your beautiful children. Do have a wonderful night rest to all participants of this session today. We're going to make the recording available, and I will share it on the group by tomorrow latest. Thank you very much. Have a wonderful night rest.